My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive doji cross yesterday, but in its own way it was also a follow-on lower to the previous session's indecisive shooting star pattern. You see, the doji cross had a very long tail on it, thus fulfilling the aspirations of the shooting star pattern, type 1 bearish. Perhaps the two most interesting features of yesterday were, firstly, the low. This was right on the newly constructed late March to date uptrend, currently at 121.72. This looks like it might, just might, be a new rolling higher support. Secondly, the close was just below the previous support, the lower bull channel line, currently at 122.26. It seems a new uptrend may have taken over from this lower bull channel line. Overhead, we now have the reassigned two downtrends, the 2008 to date move currently at 122.59 and the 2011 to date move currently at 122.60. So far today, further move down below the broken lower bull channel line and towards a new uptrend. Further below, we have the significant March low at 121.52. Cable, aka sterling against the US dollar. A counter to the counter bullish harami yesterday, and in effect the most limited of all the follow-ons to the previous session's attempted nuclear combination of a key reversal down, a bearish engulfing pattern, and a bearish closing black Mariposa, all in the same day. Yesterday's action ably deflected the bearishness seen in the previous session's actions. The market did indeed penetrate the 141.43 support, the second of the trio of well-publicized support stroke resistance levels, but reverted back up to close well over it. For your information, the trio are 140.75, 141.43 and 142.43. Overall, it seems the decision or indecision we've seen in recent weeks, which I thought may be coming to an end, is still alive and well. And the current bullish forces, evident since September of last year, still battle and rub up against the latest challenge seen overhead, that trio. The market continues to still travel higher between the lower time below, currently at 139.10, together with its long-term partner, the medium moving average, currently at 138.95, whilst above, we have the middle time, currently at 143.70, and both times are from the June to September 2020 bullish shift pitchfork. Please always remember, this pitchfork has given the bullish angle of attack of this market since September last year. Now, the new feature of the short medium moving average, currently 139.42, is now shadowing the lower time and its partner, the medium moving average. As a postscript, its latest move up can be traced back to the weekly key reversal up made 4 weeks ago. So far today, move back down to the support resistance at 141.43, as well as a short moving average, which is at 141.41, but then a reversion back up and trying to make a new piece of territory for itself. Euro sterling. A bearish harami yesterday, that was also an indecisive spinning top. This counts as the previous session's dramatic move up of a combined key reversal up and bullish engulfing pattern, by on the one hand a bullish pattern, and on the other hand by apathy. The market ended up being in between the short medium moving average overhead, currently at 86.23, and a short moving average below, currently 86.09. In part, I suspect the move down has in some way been prompted by the rapidly descending medium moving average overhead, currently at 86.63, which is now well below what had been the previous overhead resistance, that's the April 2020 low at 86.69. Meanwhile, below we also still have the extension of the flat trend line from the March-based descending triangle at 85.45. I've spoken for a while now about a smaller pattern emerging, a possible small bear flag pattern over the last 3 or 4 weeks. Nothing is for certain as yet, and whilst last week's weekly key reversal down helped, the recent daily key reversal up did not. It still hasn't been triggered as an idea. However, I still think it's worth considering, as we now have the medium moving average coming down to mix in with the market. This is enough to maintain the preliminary target X for such a pattern in the 85.20 area, just in case. So far today, a move lower, dipping below the short moving average, but still within last week's key reversal range. It's a bit cautious actually on the downside, I think. US dollar against the Indian rupee. A shooting star pattern yesterday. Now, I'm uncertain as yet whether it is the common type 1 bearish pattern or the rarer type 2 bullish pattern. Though I have a suspicion it might possibly be the latter. The top of the market was unsurprisingly capped by the flatlining medium moving average, currently at 73.28. Just above that we also have the flatlining long moving average, currently 73.47. I suppose this was all a continuation of the reversion back up from the failed attempt to break down through the congestion below, stretching from the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64, all the way down to the February 2020 high at 72.05. It is worth noting that even a pullback up may move as high as the 74.40 area and still keep the bearish incentive. However, there's a lot in the way between there and here. So far today, an attempt higher over the short moving average, currently at 72.99. However, its run up has stopped shy of testing the overhead medium moving average, and prices have moved back down towards the low of yesterday. US dollar against the Brazilian real. All I can say here is yes and thank you very much. A sixth bearish black crow yesterday that reached down through target X1, the full target for the recent sideways triangle at 513.80, and dropped to the recent to reach the target X2, the target for the off mentioned and talked about incessantly by me recent bear flag pattern, and that was all done yesterday. All this is coming after the weekly key reversal down last week. I'll now have to start figuring out what will be next. As a preliminary idea, I placed the target X3 in the 482.80 area. This is a provisional and very preliminary target for the whole mid-April to date action, being a possible bearish halfway hesitation pattern. More on it as it develops, or if it does, and I'm not wedded to it as an idea just yet. US dollar against the Mexican peso. An immediate countering bearish engulfing pattern yesterday as the move up from the previous session of a combined key reversal up and hanging man pattern petered out on approach to the overhead neckline, currently at 20.0281. The market dropped down as far as just below the short moving average, currently at 19.9115, but no more. This is further evidence of the market getting capped by this overhead neckline, and now joined by a new May-based downtrend, currently at 20.0197. Further up we have the descending short medium moving average, currently at 20.0935, and a flatlining medium moving average, which is actually I think more dangerous, currently at 20.2256, which has capped the recent efforts higher. This prolonged period of sideways to a little higher puts further doubt into the potential targets from this previously mentioned head and shoulders top, and also the one from mid-January to late March. In the first case we have initial target X1 in the 19.5 area, with a full target X2 down in the 18.85.5 area. In the second case we have initial target X3 in the 19.7170 area, with full target X4 down in the 19 even area. The initial target X3 here has already been achieved. As I've stated previously, I'll keep these on my daily chart, but that decision may well be reviewed and revised and retired possibly. So far today, a seeming counter to the counter going on today, with the market trying higher up towards a new downtrend and seemingly getting rejected by it. How unsurprising is that? Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.